Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for December 14th, 2009. This is Patrick Ceresna. First off, as always, I want to start with the S&P 500 using that SPDR exchange traded fund symbol SPY. And over the last few months, we've been discussing this 110 to 112 focal point as a level where we would be looking for a topping formation to develop. Now, we still have yet to see a topping formation, and the consolidation up along the overhead resistance levels at this moment actually can still favor an upside push beyond that. So what we're looking for here is that if we can break above this 112 area, we may have a push that goes all the way up into the 115 to even as high as the 120 level on the upside. Now that's something we certainly can't rule out for an end of year rally, but the one thing we do want to emphasize is we are seeing a lot of overhead resistance here, and if the market is able to get any momentum on the downside below this 108 level on the downside marked by the blue line, that would actually reopen the window for a push all the way back down to the 103 to 105 zone on the downside. So we're waiting for the market to make its move, and then we're going to follow suit from there. Next here, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. And we've seen the regional banks over the last month push their way back up to that 20.5 to 21 overhead resistance level. And we continue to consolidate very sideways over the last week or more. At this juncture, we're waiting for as well this market to make its move. If we break above the 21 level, that opens the window for a push up to the 22 to 23 range on the upside on this go about. But the reality is that this overhead resistance has been quite formidable, and any technical breakdowns below the 1975 level on the downside will have us testing the bottom end of that trade range down to the 18.5 to 19 area on the downside. Next here, I want to take a look at the ISE index, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And we had follow-through downside selling last week as we're slowly pushing toward that 98 to 100 focal point on the downside. After this failed rally attempt created this flagging wedge, really at this juncture, a retest back down into the zone is quite realistic. But what will be the more valuable information is what happens at that 98 to 100 zone. Any technical breakdowns below that level opens the window for much deeper consolidation. But this is something that will probably move in line with the market. So if the S&P is breaking higher, then these support lines should hold, and this index should be relatively range bound during a broader market rally. But in the same regards, if the whole market rolls over, then if the index gives out the 98 level on the downside, then we could see a much deeper sell cycle. Similarly to what we're seeing in this index, the Home Builders Index, which is the symbol RUF, is coming back down and retesting some important support lines. We adjusted the focal point down to the $8.75 to $9 area to reflect where these two bottoms are being tested here. Any technical breakdown below this level will actually have only a marginal downside down to about the 8.25 to 8.50 zone on the downside. Really at that juncture, we'll be looking for another market consolidation to occur in the home builders. But if we don't see any follow through rallies at any stage, then a deeper sell cycle can have us retesting all the way down into that 7 to 7.25 area. The first and most important thing right now is to find out whether or not this support line holds, and whether we first get a bounce off of the support line or whether we're going to break through it. Next here, I want to take a look at the natural gas index, which is a symbol FUM. We've been talking about that head and shoulder style topping formation developing here, and that we needed a technical breakdown below 94.96 to have that thrust down to complete the pattern. If that still happens this week, we would be looking for a push down into the 86 to 90 zone on the downside. But interestingly enough, these support levels continue to hold in here, and we are seeing reversal in some of the natural gas commodities themselves. and therefore we actually can't rule out the possibility that these support lines hold and this market makes a push back up into the 102 to 105 zone. So we'll be watching these support lines early this week. Finally, I want to take a look at the mini FTSE 100 index, which is a symbol UKX, and the UK market has had a very similar chart pattern to what we've seen in the S&P 500 and the Dow and so on. At this stage, we continue to be consolidating at overhead resistance levels here in the 530, 540 area. Any technical breaks above 540 on the upside will immediately open the window for a thrust up to 560 on the upside. But in the same regards, if this overhead resistance continues to be formidable the way it has been, then any a reversal and technical break below 520 will open the window for testing all those support lines made at the 500 level. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.